Friends, today we are going to do one example question of statement of cash flows. Question is, the statement of financial position is given in exam. Statement of comprehensive extracts of statement of comprehensive income is given with few adjustments. And the requirement number 1 is produce a statement of cash flows for the year ended 31st of December 2022 in accordance with IAS 7 statement of cash flows. So full-fledged statement of financial position is given, and necessary information from the statement of comprehensive income is also given. So we'll start our question from profit before taxation. Profit before taxation is here. $146,000. So profit before tax will be 146,000. Then we are having few adjustments. We will highlight all the adjustments once we'll finish. Investment income for year 2022 comprises the following: dividend receivable 78,000 and interest receivable is 36,000. So as you know, incomes has to be added up. Dividends 78,000. So we'll deduct these figures because we have already added up while calculating the profit for the year. And interest is 36,000. These two figures are also adjustment number 4 is finished. Then interest payable is over here 24,000. So this figure will be added up 24,000. Then we are having depreciation. Depreciation, he did not include depreciation charge for the year anywhere. There is only one adjustment, number 3, and the relevant information is given in the statement of comprehensive income. So we have to prepare the working one. Accumulated depreciation account. Okay. So opening balance 2021 will become opening balance 297,500. Opening balance is 297,500 and closing balance will be 321,400. 321,400. Whatever depreciation we charge to disposal is in adjustment number 4. During accumulated depreciation on the disposal amounting 37,700. 37,000. Rest will be a balancing figure charged to statement of comprehensive income. Okay. 37,700 plus 321,400 359 100, 359 100 minus 297 500 will become 61,600. Okay, so 61,600 from working one. 61,600. Let us check again. Yes, 61,600. Loss on sale of asset. Working two. Read adjustment number 3 carefully. During 2022, plant and equipment which had originally cost 65,200 was sold for 17,900. Accumulated depreciation on disposal amounting to rupees 37,700. Okay, so we'll prepare a disposal account. It assets cost is original cost 65,200. $65,200. Okay. Accumulated depreciation of 37,700 was sold for 17,900. So the difference is 62,200 minus 37,700 minus 17,900. During the 2022, plant and equipment which had a cost of 65,200. So 65,200. 1 second. This figure is 65,200. Okay, how much is the difference? 65,200 minus 37,700 minus 17,900. So loss on disposal is 9,600. Loss on disposal is 9,600. So these are operating profits before working capital changings. 127,200. Okay. So let us mention over here working number 2. Then inventory, trade receivables, and trade payables. Okay, 101. Inventory 2002 inventory is 260,100. 260,100 minus here 230,200. 230,200. So this is done. Okay. This is also done. There is no change in the investments. Okay. So receivables are last year, this year 196,400. 196,400 minus last year 135,800. And payables, let us conclude these two first. 260,100 minus 230,200. So this is an increase in receivables, inventory case. So it will be a minus figure, cash outflow of increase in inventory. Same receivables have been also increased. So 196,400 minus 135,800. So 60,600. Okay. What about payables? Receivables are also done. Okay. Payables last year 2022. 98,400 this year 98,400. 90,600. So this is a decrease in payables. One second, let me check again. Sorry, increase in payables. So it means it will be a positive figure. Increase in payables. 98,400 minus 90,600. So 7,800. 98,000. I think so. We did mistake. 98,700. 98,700. So that's why I'm highlighting 101. 98,700. 98,700 minus 90,600. So it is 8,100. 8,100. So these results will be cash generated from operations. Now we are having two workings, interest paid and tax paid. Okay, interest 2022. Let me write over here just to get rid of it. 2022, 2021. Now we will not have any confusion. So opening balance of interest accrued is 6,000. That is do working number 3. Students, please, you have to mention these workings to get maximum marks. These are not as much difficult. Standard format workings. When we'll do the working for taxation, simply we have to just to change the number, just to change the name. Instead of interest, we'll write down the taxation. So interest accrued is 6,400, 6,000 opening, and 4,000 is closing. In a statement of in a statement of cash flows, we have charge interest payable is 24,000. 24 plus 6 is 30,000. Minus 4 is 26,000. This will be a balancing figure. So interest will come up from working 3. How much we have paid actual in cash is at 26,000. Okay. Same working for taxation. Okay. Corporation tax working 4. Same format, same workings. We are just changing the number, just changing the name. Taxation is 64 and 60. Opening balance 64. In statement of comprehensive income, we have charged taxation of 61,000. Okay. 1 to 5,000 minus 60,000 it will be. In actually cash, we paid 65,000 taxation paid. So tax paid will be from working 4 of 65,000. So 46,200 will be our cash flows from operating activities. These are results 1. Okay. Then look at the property, plant and equipment numbers. These are also done. These numbers. Plant and equipment cost opening balance is 37,100. I would like to add over here working number 5. Property, plant and equipment, or you could say that plant and equipment. Opening balance is 637 100. Okay. And closing balance is 767 300. 767 300. Okay. 767 300. So these are also adjusted. Okay. Plant sold during the year cost 65,200. Disposal 65,200. Okay. So addition will be 65,200 plus 767 300. So cash involved in the purchase of non-current asset will be 637 100 195 400. So working 5. Purchase of property, plant and equipment from working 5 194 195 400. Okay. This asset was sold for 17,900. So proceeds from sale of assets 17,900 plus we received two incomes. Dividend received is 78,000. And interest received is 36,000. So 63,500 is a cash flows from investing activities. Okay. Then financing activities includes ordinary share capital. Opening balance 250, sorry 200 and closing 250. Working number 6. Opening balance is, you could see over here, is 200,000 and closing is 220 plus 30, 250,000. So statement of comprehensive income will be, sorry, cash will be 50,000. The proceeds from sale of issue of shares is, you could also say that proceeds from issue of shares are 50,000. Working 6. Okay, then Loan notes last year was 0, this year are 200,000. So issue of loan notes or proceeds from issue of loan notes are 200,000 and dividends paid are current year. So last year 60,000 dividends will be payable in this year. So dividends will be 60,000. So net cash increase during the year is 80,700. Look at the cash and cash equivalents. Okay. Last year opening balance was we had only a bank overdraft of 71,000. Okay. Opening cash and cash equivalents were 71,000 negative. So cash and cash equivalents by the end of the year should be 9,300. Cash and cash equivalents by the end of the year should be 9,300. So proved that we have solved question 100. Our question answer is 100% correct. Okay. This 80,300 becomes or came from cash flows from financing. Okay. Let us add up all these answers minus, I'm giving you the working of this 80,300 minus 46,200 minus 63,500 and plus 190,000 from financing. So let us calculate again. Minus 46,200 minus 63,500 plus 190,000. So answer will be 80,300. Once you will deduct 71,000, so net answer will be 9,300.